keep answering the questions. What is the liability of a partner in a partnership firm? Uh, the liability of a partner, yes, it is unlimited. Okay, the second question I want you guys to ask is registration compulsory in case of a partnership firm? Uh, it's an optional, it's not compulsory, only the agreement is compulsory. The third question I want you guys to ask is, can a partnership firm buy properties, or let's look into the other way around, can you sue a partnership firm or can you sue a partner? Can you file a case against a partnership firm? If partnership firm is sued, whether the firm gets dissolved, or is it the partners who are at the liability of the risk? Right? The firms does not have a individual identity. Now you need to understand, in case of a firm cannot be sued. The sue, whatever happens, is going to be in the name of the partners. Partnership firm and a company is different in this way. A partnership firm does not have any separate legal entity. That is, partners and partnership firm, guys, listen to it again. Partners and partnership firm are not different, whereas members of the company and a company are two different identities. Whether you sue a firm or you sue a partner, the effect is the same, because partnership firm and partners are considered interdependent. They do not have a separate legal entity. Whether the firm is registered or not registered, it does not matter. The firm the firm and partners do not have a separate legal entity. Both are considered to be the same. Are you all clear? But if the firm is registered also, it does not matter, right? What we are going to be learning is, for this chapter, majorly, since it's theoretical, we would be looking into more of these definitions and how it's going to affect us. So we would be trying to cover on different kinds of companies which are there, and what are the differences between each of them. Are you all clear till now? Right, let's try getting into it. Now, what do you mean by a company first? When we say a company is a company which is registered under the Companies Act 2013 or earlier. So to be a company, what you have to do, you have to make sure that you're going to register a company. And where are you going to be registering? You're going to be registering with a entity called as Register of Companies. And under what section are you going to be registering? Under what act are you going to be registering? You're going to be registering under the Companies Act 2013, right? So see this part of the definition. A company is termed as a company which is formed and incorporated under Companies Act 2013 or any earlier laws. So to be a company, you need to make sure what you are registering under a Companies Act. You should register it only as under a Companies Act. Only then it can become it can come into existence. Are you clear? Now there are few things which is covered under the Justice Marshall definition, which is going to give us more insight about what a company can be, right? See here, Justice Marshall says that a corporation is an artificial being, invisible, intangible, and existing only in the eyes of law. That means it is not having any physical presence, but yes, it is continued to have an entity, that is an identification in the eyes of law. A company is created by law and its death can also be only by law. In a partnership firm, what happens is, let's say one partner dies. If one partner dies, the firm will be dissolved. Whereas in case of a company, even whether the member dies or not, it will not come into closure. The closure will only happen only when what it is being given under the law that it is dead. So the dissolution should also happen within the law. Creation is by law, dissolution is by law. Understood till here? Now see the Lord Justice definition. This gives me another couple of features about a company. That is, the first one, what it says is, under Lord Justice, it's an artificial person created by law, that we already covered. It is a person. See here, it is giving an identity of a person. Who gave birth to it? It is given birth by law. And what is it? It is having a perpetual succession. What do you mean by perpetual succession is, whether members come, see here, whether members of a company come or they go, company will continue to sustain. Company will do what? Continue to sustain till law does not kill it. The third part is, since company is an artificial person, somebody should sign behalf of the company, and that is my common seal. Common seal is officially the signature of the company. Are you all clear? Are you all right? Guys, sometimes they've asked this true or false question, or uh, they have asked you to write the features. Do not try mugging up anything. What I would suggest is, you can just understand the meaning and write it in your own words. First one, salient features. See the first part of it. I told you guys that the company is incorporated as per law. The company is incorporated as per what? Law. So for a company to come into existence, it is compulsory that it has to be registered under the company's law. Only if it is registered under company law, it is going to come into existence. Second one, what did I say? It has a separate legal entity. What do you mean by separate legal entity? A separate legal entity means company can file a case against any person, and any person can file a case against a company. It is mutual. Company can file a case against others, and others can also file a case against a company. That is, it is as good as a as good as a human in the eyes of law. Third one, perpetual succession. What did I say? Whether members come or members go, it does not affect for a company. Company will continue to sustain. In case of partnership firm, let's say all the partners die, partnership firm automatically comes to the closure. But that does not happen in case of a company. Are you all clear? Done. Now, what is common seal? Now, when I say a common seal, what it means is, since the company cannot sign the document, because company is not a human, right? So on behalf of the companies, what happens is, the directors are the guys who are responsible for managing the company. So on all the official documents, the two directors, or a director and a company secretary, shall make sure that the signature is placed on behalf of the company through a common seal. So a common seal is basically what? An official signature of the company, which will be done either by two directors, or one director, or a company secretary. Next one is limited liability. What do you mean by a limited liability? A liability, now I want you guys to understand. See, let's say for an example, let us try understanding what do you mean by a share capital. The total capital of the firm, we call it as share capital. In case of a company, the total capital of the company, we call it as what? Share capital. Are you clear till now? Right? Now, this total share capital of the company, we divide it into smaller bits. We divide it into what? Smaller bits. These smaller bits, we call it as shares. Are you clear? Yes, are you guys clear? Right? Now, why is this share capital important? Let's say for an example, the company is having a share capital of 1 lakh. Company is having a share capital of what? 1 lakh. And 10, they want to divide this into 10,000 shares. 1 lakh capital, they want to divide it into 10,000 shares. Therefore, value of each share will be 10 rupees. Understood? Value of each share will be what? 10 rupees. Now, what is the liability of the shareholder? What is the liability of the shareholder? Now, let's say a shareholder has paid 10 rupees already to the firm. How much did the shareholder pay? 10 rupees already to the firm. In case of the closure, that is the liquidation of a company, the shareholder's liability is 0. What is the shareholder's liability? 0. Why? Because the value of the share is 10 rupees and he has already paid 10 rupees to the firm. If let's say the shareholders, the face value of the share is 10 rupees and the shareholder has paid 7. Out of 10 rupees, how much has the shareholder paid? 7. The company went into liquidation. Liquidation means what? The company is getting closed down. When the company is getting closed down, the liability of the shareholder will only be equal to the unpaid value of share. And what is the unpaid value in this case, guys? What is the unpaid value here? Correct. The unpaid value is what? 3 rupees. This 3 rupees which the shareholder has not paid, his liability will only be 3 rupees. His liability will only be what? 3 rupees. Whereas, let's say in case of a partnership firm, if the firm had a 10 rupee liability and the partner still has to pay only 3 rupees, what would have happened is the creditors would have taken first 3 rupees. The creditor would have taken what? First 3 rupees from the partner's capital. Then he will go and take 7 rupees from the personal asset of a partner. Right? Whereas in case of a company, the shareholder will say, boss, I have to pay 3 rupees only. I don't care what your loss is. Company is different. I am different. Go and ask money with the company. I should give company only 3 rupees. So I will give company only 3 more rupees. Are you all clear till now? So did you understand what do you mean by limited liability? Guys, remember this. When I say limited liability, I want you guys clearly to understand what has been written. A lot of students do mistake in the exam. The liability of the shareholder is limited to the amount he has agreed to pay on the shares allotted to him. Right? That is, if the shares are fully paid up, that means share value is 10 rupees. He has paid 10 rupees. That means his liability is 0. No further liability is required. Friends, are you clear? Done? The next one, what you need to remember is, in case of a company, right, the guys who run the company, and the guys who give money to the company are different. The guys who give money to the company and the guys who run the company are different. The company is run by a board of directors. Who are this board of directors? The board of directors are the representatives elected by the shareholders. So the shareholders are going to appoint few guys and say, boss, on behalf of us, you run the company, right? So they become the managers of the company. That's why there is a clear distinction between the owners and the management. Now, in case of a partnership firm, right, whenever a partner has to come in, he has to make sure that he takes permission of other partners. He cannot come in just because one partner has agreed. Whereas in case of a company, it does not matter. We are talking of public limited company. In case of public limited company, it does not matter. You can easily join a company or you can leave a company. So it's your option. There is no restriction can who can become the owner. Whereas private limited company has a restriction. So remember this, transferability of the shares. In shares are easily transferable. Exception is what? Private limited company. So private limited companies cannot transfer shares without the approval of other members. Are you clear? Done. Now one of a power what we guys get as a CA or a CSS. Now one part is, it is the Companies Act which gives us power. Which is what? The Companies Act which gives us power. The Companies Act is saying, see here, audit means what? Verification of accounts. So what the Companies Act says is that since the company is being run by others, the CA has to make sure they periodically audit the accounts. It is the what? The CA who's gonna come and audit the accounts periodically. Are you guys clear till now, friends? Right? Okay. Uh, Guys, the next part of the question is basically the about the different kinds of company. Generally, there is a true or false question, or okay. From exam point of view, for CS guys, it's you get a lot of questions. For CA guys, either you get a 1 mark or a 4 mark. Uh, very rarely have you guys got more, but for CS guys, yes, you have more questions on this. Because a lot of theory questions, and this is your bread and butter, not your partnership accounts or other things. Now let us try understanding the first case of different kind of company called a government company. uh, the first kind of company we are going to be talking about is called government company. Now what is this government company about? A government company is a company where, see here, in a company, right, if we say this is the share capital of a company, usually for anyone to control the ownership, 51% is important. 51% is important. Clear? Now what do we say a government company is? If this 51% is held by central government or state government or combination of central or state government. Are you clear? If the 50%, 51% of the share capital is held by whom? Central government, state government, or combination of central or state, we call such companies as what? Government company. Are you clear? Right? Now, the second one, you need to understand this definition. What do we mean by a foreign company? What do we mean by a foreign company? When I say it is a foreign company, what we figure out is one, it should be incorporated outside India. What is it? It should be incorporated outside India. Now, just incorporating outside India does not make it a foreign company. See, if they're incorporated outside India, why should they come and follow Indian Companies Act, right? If, let's say, for an example, you are in US, why will you come and follow rules of India? Now, the reason why we are going to be looking into this particular uh, foreign companies, because they have to do somewhere some relationship with an Indian company. So now what are we talking of here? A foreign company means any company or a body corporate which is incorporated outside India. That means it has been registered outside India. Second part, very, very important here, but they have set up a place in India either by itself or through an agent or through electric mode. If you see an example of Amazon, Google, uh, or Facebook, they are all foreign companies, but they have one place in India where they run their operations for. For all our purpose, they are going to be considered as what? Foreign companies. Second one, once having a place is fine, and they have to conduct a business activity. So there are two conditions. One, what? They should be having a place physically or through an agent or through an electronic form. Second part of it is basically conducts any business activity in India. Okay, Spurti is asking a question: is a foreign company an MNC? uh, Spurti, if you look into it, Infosys is also an MNC. MNC stands for multinational corporation. That means any company which is present in multiple countries. So it can be Indian origin present in multiple countries, or can be foreign companies which are present in multiple countries, right? So Infosys, if you look into it, it's an Indian company, but it's an MNC because it's operating. Here, MNC does not have any relevance in the Companies Act. Friends, all clear? Now the next part of the definition, which is little important for me, because we will be foreign companies, yes, they have certain provisions of the Companies Act which they have to follow. Why? Because they're doing their operations in India. The right, the next one what we will be talking of is a private company and a public company. Now I like the definition of a private company and a public company, public and private. Now what is a public company? A public company is a company which is not a private company. Easy definition. What is a public company? A public company is a company which is not a private company. Now when we have something like this, what makes a lot of differences to understand what is a private company. Because if any condition of a private company is not satisfied, automatically it ends up becoming a public company. Are you all clear till now? Did you understand the definition? A public company is a company. Now, don't say what is a private company. Don't say that, guys. A company which is not a public company is a private company. That's not how it is defined. It's only defined from a public company per se, saying any company which is not a private. When a law defines like that way, what becomes important is that we need to start figuring out what are the conditions of a private company. So let's look into this. See here, a private company is a company. Now there are few restrictions with regards to the private company. First one, it should not let anyone have a share. The shares of the company, let's say me, Ritik, and Veda are shareholders of a company. If Veda wants to transfer her shares, there is a restriction. That is, she has to take our permission and only transfer. So the first condition of a private company is what? There should be a restriction in terms of transfer of share. Right? Second condition is it limits the number of its members to 200. The members in a private limited firm can be what? Maximum 200. Third one, a private limited company cannot go to public and say, boss, my shares are available in a company, please buy. You cannot do it. What you can only do is you can give it only with your known sources. You cannot give it to everyone. Now, why did I say that this definition of private limited becomes important? Remember this, there are three conditions. Condition number one, that you cannot what? You cannot invite your shares from the public. So anyone cannot become a shareholder. You can only become a shareholder only when you have invited them. You cannot go and give a application in the open. The second thing you need to remember is this, that the number of members can be maximum number of members in a public limited company can be 200. The third condition is you cannot transfer the shares without the approval of other shareholders. Are you all clear till now? Now, like I said, what is this public limited company? Now, see here, a public limited company is a company which is not a private company, provided that is a subsidiary. I have not come to the subsidiary definition. I'll come back later. So, what are the features of it? There is no minimum paid up capital. No minimum paid up capital. Right? Guys, this is an old one. So please remember this. Now there are no minimum paid up capital as per the Companies Act. So you can start a company without even any money. Earlier there used to be a restriction. Currently there are no restriction. So you can start a company without even having any capital. So there is no more a capital requirement. Are you all clear till now? The next one, what you need to understand, there is something called as a one-person company. What is this one-person company? A one-person company. A one-person company is a company where there is only one person who's a member of the company. So there are no many people. One person, he has just decided that he's going to start a company. Bala, I'm going to be coming to that part a little later. What is a subsidiary company? So we'll come back to it in case of both government and public. Uh, so what is a small company? When I say a small company is a company which is other than a public company. So that means what? It can be a private limited also, it can be a government company also, it can be any company, but it should not be a public company. First one, are you clear? A small company cannot be a public company. Second one, there are two restrictions with it. Remember this, the paid up share capital of the company cannot, that is the total capital of the company cannot be more than 50 lakh rupees. The total capital of the company cannot be what? More than 50 lakh rupees. Clear? Second, the profit and loss account. What do you mean by turnover? Turnover means revenue. So the revenue should not exceed 2 crores. Clear? So there are two restrictions. What? The capital can be 50 lakhs and the revenue should not exceed 50 crores. Till that time, we call them as what? Small company. Are you all clear till now? Now, before we go into the next further definition, this is something which is extremely important for you guys. Is what do you mean by a holding company and what do you mean by a subsidiary company? Now, I say a company to be a holding company, right? In relation to a company, which means such companies have subsidiaries. Now, I want you guys to understand what is this holding company. And let's say there is a company A and there is a company B. A is supposed to be called as A, I call it as a holding company, and B, I call it as a subsidiary company only when any of these three cases can happen. What are these three cases? See the case number 1. Controls the composition of board of directors. Now, what is this controls the composition of board of directors? Let's say A and B. For taking decisions of B, there are 5 board of directors. How many board of directors? 5 board of directors. Okay. Out of this 5 board of directors, what is happening is, to take any decision, you have to have a majority. What is the majority? 3 people. Correct? If these 3 guys can be appointed by A only, then we say this company B is the subsidiary of A. When will you call B to be a subsidiary? Is when the board of directors control, that is, the control of this is done by A. Did you all understand this? The second question is, if A holds more than 50% of B, okay, Alan, see here. See, in case of company B, guys, everyone see here, in case of company B, there is, the decision of the company is to be taken by board of directors. Now, whatever majority of the board of directors say, that is what company B will follow. Why? Because it is being run by the board of directors. Yes or no? Now, let's say if the B is having 5 board of directors. How many board of directors does B have? 5 board of directors. Out of this 5 board of directors, right? To take any decision, what is the majority? The majority is 3. If these 3 people who are going to be taking decisions for B are appointed by A, don't you think that control of B is actually done by A? Because the guys who are going to take majority of decisions are anyway going to be given to the control of A. Yes or no? If this case exists, then we say A is the holding company and B is a subsidiary company. Are you all clear till now? Done? Now look into the second case. There is A, there is B. Okay. Now B's share capital, right? If more than 50% of them is held by A, if more than 50% of B is held by A, then who's having a control? A, right? Then we say A is a holding company, B is a subsidiary company. If more than 50% of the share capital of B is held by A, then we say A to be what? Holding, and B to be subsidiary. Are you clear till now? Okay. Sharath has a question. What if it is more than 50%? Oh, sorry. What if it is exactly 50%? I want you to see this part, what it says. The law says exercises or controls more than one half. So they should be holding more than 50%. If it is not, then we are not saying it to be a holding company or a subsidiary. Now, Kusuma, see here, a company B is controlled by board of directors. If this board of directors, the ones who are going to run the company, sorry, she understood it. Okay, guys, I want you to see this scenario. This is case number 3. A is a holding company, B is a subsidiary company. Are you clear? On the other side, B is having another subsidiary called C. A is having control of B, B is having control of C. In this case, what do we say is that A is a holding company, C is a subsidiary company. Understood? A is controlling B, B is controlling C. So indirectly, A will control C. Now, guys, I want you to come to this definition. Now, see here, what does this definition say? The definition says so if, let's say, there is a company B, which is a private company, which has been held by A, which is a government company, and A is a holding company and B is a subsidiary company. Guys, did you understand the scenario? B is a private limited and there is a company called A, which is a government company. Because of this condition, A company became a holding company of B. Therefore, B is a subsidiary of A. Understood? If this scenario happens, we then say B is also a government company. Everyone understood? Purvi, there are lots of government companies that way, which have been formed by the government for the purpose of just holding it and given control to others. Yes, holding company always has a power over subsidiary. Okay, the next one you need to understand the maintenance of books of accounts. Now, every company has to maintain its books of accounts to make sure that they give a true and fair view of the affairs of the company. So your books of accounts should be maintained in a way that it's going to give you what? True and fair view of the balance sheet. This is maintained as per section 128. Bala, this is important for you. This is maintained as per what? Section 128 of the Companies Act. Now, when I say a financial statement of a company, a financial statement of a company has 4 statements. How many statements do we have? We have 4 statements. Statement number 1, balance sheet. We already know what is balance sheet. Then we have profit and loss account, cash flow statement, statement of changes in equity. What is the statement of changes in equities? How many equity shareholders came in and left during the year? Last one, we call it as explanatory notes or notes to accounts. So basically, for the final accounts of a company, I have balance sheet, profit and loss account. This was anywhere there. Then we have cash flow statement. Apart from it, I have something called as statement of changes of equity. Alan has a question. Are all of this in the syllabus? I'm doing from your study material only. You get, guys, I would only read this topic once and once before going to exam. Don't break your head learning so much, because as I told you guys, the importance is either 1 mark or 4 mark. The maximum amount of time I would be spending on this chapter cannot exceed 4 hours. Remember this. The maximum amount of time I'm going to be spending on this chapter cannot exceed. No. The statements are not there. These are the statements are part of your intermediate syllabus. Now, when we are doing our accounting, right, the financial statements, we have to make sure that we prepare only as per Schedule 3. Now, the Schedule 3 gives me a format, and I have to follow this format only. You cannot write assets one side, liability on another side. You have to follow the format given in the Schedule 3. Clear? Now, this part not important, form of balance sheet and P&L, but I want you guys to run through it. The way your balance sheet runs. See here, this is not required for your exam, but I want you guys just to run through it. See here, on your first heading is, you have the name of a company, balance sheet date, then you have current year figures and the previous year figures. So you have 2 things you're going to be writing, current year and previous year. Share capital, then you have long-term liability, current liability, then you will do the total, then you're going to write assets. Till now we were all doing assets on one side, liability on here. Here it's the vertical format of a balance sheet. Bala, you guys do not have anything of this. You only have the theoretical side, no statements, no formats, nothing. And this is the format of profit and loss account. Again, vertical format, we write revenue first and then we reduce our expenses, right? Guys, that's all part of your chapter 1. Anyone, any doubt on chapter 1?